So guys, today I will be showing you how to spot supply and demand. Some they call it order blocks, so I will be using such language as well. So as you can see, I will talk about things that you need to look at before you are taking the trade. Okay, first of all, you have to consider market structure. Look if that order block that you are going to take a trade on, did it break structure? Okay, if it didn't break structure, you have to look at the momentum of the market, the way the market comes to that area whereby you want to buy or sell. Is it good for it to, is it going to hold or not? Okay, so as you can see here, we have that demand. After we have other demands there, but the problem is we failed to hold on those demands because of momentum, the way the market was pushing to the downside. So we waited for rejection. While the market rejected, it created a demand there and it pushed to the upside. So you can go to a ratio of 1:3 mostly, or 1:, or you can just look at the previous high or a previous low is been taken out. So that is going to help you a lot. There we have another order block which is out of session. Usually I trade a New York session, so that one is during the London session, and we have a beautiful order block there which is a demand. Okay, it has been breaking structures to the upside, but it didn't hold because it was out of session. Okay, we need to trade where there is money. Okay, when the US banks opened, you need to trade during those hours because that is where the money is, guys. Okay, so it's very important to follow those rules. All right, it's part of the strategy. All right, so we have a similar thing here. Whereby the market has pushed to the downside. All right, we have that beautiful order block there which I've just circled, but we are not going to take a trade on that order block. Why? It is because we didn't break structure when we're moving to the downside from that order block. Okay, the only order block that we will be taking a trade in is the one that's going to break structure. If you are going to look for those things, that is why it goes together. Market structure and demand and supply, it goes together. We have a beautiful supply there. The market pushed to the downside, it breaks structure, and then when the market came back, we had some rejections, which is a sign that the market wants to go or wants to respect that supply area. Okay, again, you can go 1:3, or you can look on the previous low if you are going to leave runners in the market. So guys, so you have to look at these things as well as the gaps. Okay, as well as the gaps, they played a major role because that is where the market wants to correct. Okay, the gaps needs to be filled. I will do a video specifically for gaps in the market. How do you spot gaps in the market? Okay, so gaps, they play a major role. Like there we have a gap. Okay, so I think we can look for another one which is going to help us as well. If you are alone, you pause the video, you look on your charts if you can find those areas, as well as you can see here, we have that supply, which is beautiful, but then it didn't, when the market was moving to the downside after creating that supply, it didn't break structure. The only thing it did, it moved up again on that green candle. It moved up, and then when it was moving to the downside, that is where we see a break of structure. That is why we used that order block there, that supply. So that supply, because we have broken structure when we're moving to the downside. Okay, so that is why it's more valid. And due to the rejections, like I said, you have to look at the momentum of the market. Those rejections, there is a sign that the market wants to go to the opposite direction. So you take your 1:3, or you look at the previous low being taken out. So you are not forced to hold the market, guys, due to the market conditions that we are having nowadays. So you have to leave runners, you have to secure profits. So yeah, for now, this is what I have, guys. I will come back with another video to explain gaps in the market.